All right, we're in and out of session highs for the Dow today, up about 487 points. People always, go at this with a bit of a pause, though, because they remember what's happened in so many trading days past where we maintained a rally. What was it yesterday for a while? I think it was yesterday. We're up over 400 points, and then we finished down over 200. So it happens sometimes where people get a little bit ahead of their skis, but nevertheless, a triple-digit advance in the markets here. No matter what's happening today, though, a lot of folks are facing tough times, or they're rejiggering their portfolios. And in the case of some who are looking at retirement, rethinking retirement because of those portfolios, should they? And does that mean a good many of them putting off retirement or doing the right thing? Michelle Schneider back with us, Ray Wang back with us. Ray, what do you think of that? That people look at this market and they say, all right, I'm encouraged by what's happening today, but I've lost my shirt. I'm in a bear market myself, like all the major averages, and I'm going to have to put off retirement. What do you tell them?
They always say don't panic. We're in the middle of a dead cat bounce. And, I think the important thing is to do things like dollar cost averaging. It's important to look at, picking the right stocks. The stocks that we're interested in are the ones that have a lot of cash on hand, really good margins, that are paying dividends. It's also important to understand that, these cycles ebb and flow over time. And so you're not taking your entire portfolio out. If you were to switch everything out to cash at this moment and not in the market or have anything in the market, you might look fine 5 years out, might not look fine 10 years out. And that's really depending on the time frame of when you're actually taking retirement. But if retirement is in the next few months, yeah, that's a very different strategy.
People might overreact. Michelle, a lot of people think we're in an oversold conditions. Others say we have a ways to go. I know Ray Dalio famously saying the higher interest rates go, the more stocks are going to get pounded. I think he pegged a 4% Fed funds rate to meaning another 20% hit for stocks. We're very close to that. So what do you think?
Well, I certainly agree with Ray. I think that if you have 5 to 10 years to see if the market comes back to the levels that we saw at the peak in 2021, that's one thing. But if you're getting set to retire soon and you're counting on that money, I kind of wish you would have already gone to cash, because many people on this show, experts, have really warned for that. Yeah. Now, in terms of what's happening right here, we're all the way rallied to the high of Friday after we open lower. So we definitely need to prove some more right here before I start screaming bottom. And if this is the bottom, then it'll be the most fantastic example of long-term charts and how you hold these long-term moving averages. In the case of the S&P, it would be the 200-week. So we'll see, but I'm more skeptical at this point.
I know you guys get sick of hearing it. At my age, long-term is like maybe lunch tomorrow. So I don't have time. So you got to help me with this. Guys, I want to thank you both very much, Michelle and Ray, on that.